Myself Vaibhav. In today's session, we are seeing a fabulous start to the week, and it has been phenomenal to say the least. And three key driving factors are there which are having this positive impact on the equities. And one key thing is the possible introduction of stimulus bill in the US Congress, and the hopes are high that bipartisan support is probable for these new measures, and this bill is likely to be passed. And as a result of that, there is this fresh upward momentum. Along with that, two other key factors are also supporting the risk on sentiments, and one is the extension of the Brexit deadline, and that is also having the positive sentimental impact on the GBP's valuation. GBP has also soared in today's session, and on the pandemic front, there is rollout of this vaccine from Pfizer, and that is going to be helpful. Of course, not straight away, but that is also going to have the positive impact, and in due course of time, the pandemic will be brought in control. So all these three key factors are pointing to the bullish momentum to start the week, and I think for most part of this week, the momentum is likely to remain bullish. So let's get started for the day. And on the data rocket, we got this industrial production number, and here this number is actually for month of October. So we are looking at the data 2 months old, but still it is in line with the expectations. And as the things have unfolded in recent past, the decline is the norm of the day, and that's what we are seeing in these numbers also, where the year-on-year decline is of 3.8%, whereas there is growth in terms of month-on-month percent, and that has reduced the intensity of decline. But still, I think it will be a couple of months before we see robust turnaround in the industrial sector in the euro area. Now let's shift our attention to the technical sector, and here we will see the technical analysis for S&P 500 first, and then we will also see what's happening in the gold, that is XAU in terms of USD, US dollars. Let's start with the equities. The key equity index for US S&P 500. This is the daily time frame chart, and it has been a phenomenal run, and I don't really need to repeat that the underlying momentum has been bullish. And even this time around, even I was expecting this correction to last a bit longer, but that was not the case. And here we are looking at fresh all-time highs being formed in this week also. The last week we had new all-time highs for the S&P 500, and this week is not going to be any different as far as the technical projections are concerned. Of course, anything can happen. Maybe we might see even further change in the trend, but as of now, at the moment, the momentum is on the bullish side, and as a result of that, it will be better for us to look for long trades, the buy trades in today's session. So coming to the 4 hourly chart, we have this immediate hurdle now, just little above the 3700 level. And if we see the price action for the day, as I said, the equities are off to a flying start, and that is translating into this gap where this jump of around 20 points is there compared to the Friday's closing level. And it's not looking likely that this gap is going to be filled anytime soon. Of course, it will be, but in due course of time, not straight away. And at the moment, I am expecting this positive momentum to sustain. And even in today's session, it will be better if we focus on buy trade while utilizing this prior consolidation phase price level of around 3670 as our deciding factor for the day, kind of a marker while deciding whether to go long or whether to sit on the sidelines or even to look for the short sale trades. And as long as these key levels hold, the underlying bias, the momentum is likely to be remaining on the buy side, and that's what we can try to bank on. If you consider this pivot point formation, there is no key hurdle or key support in play. We have the next support almost 3 percentage point away from the current valuations, and similar thing stands for the support. Also, we have central pivot point, which is also far away, almost 5 percentage point away. So we have these S&P's 500 price action unfolding in the bullish territory, but far away from any near-term major support or resistance. So more or less, we will have to be relying on this lower time frame formation, and to that extent, we can utilize this confluence zone of 50, 100, and 200 SMAs. Here we have these convergence of 100 and 200 SMAs happening closer to 3670, and then on the lower side we have these 50 SMA. Of course, till Friday we had this bearish momentum in the S&P 500, and as a result of that, it was looking like that even the 100 SMA will cross below these 200 SMA. But in today's session, we had this turnaround, and that has pushed the S&P 500 back in the bullish trajectory. And as the things stand, I think for today's session we can utilize this confluence zone of these two crucial SMAs while utilizing these lower 50 SMA as our possible marker for keeping the stop loss levels. So if we are going in for any buy trade in today's session in the vicinity of these two SMA confluences, the 100 and 200 SMAs, which are passing closer to just little above the 3617 mark. So here try to look for any buying opportunity if you are fortunate enough to get the correction, desired correction, and then consolidation phase is also the requirement before getting onto a new trade. So if that happens, if situation unfolds as per our anticipation, then I feel we should be targeting this price zone of around 3670 plus, and on the lower side the stop loss can be kept anywhere closer to 3655 to 3660. So for a risk of around 20 points, we will be looking at good amount of profit in case our anticipation comes true, and we see the S&P 500 making the new all-time highs and crossing above the immediate hurdle, the prior swing high, which is barely above the 3710. So risk reward ratio also seems good enough, and I think if we are going in for a risk of around 20 points, we can target at the minimum around 40 to 50 points on the higher side, and as I said, that will give us the risk reward ratio of better than 1 is to 2, 1 is to 2. Now moving on to the gold, this is the daily time frame chart formation for the gold, and the gold was moving steadily higher in last week, but by the middle of the week it lost steam, and then we saw this deceleration happening in the gold. And if we see the formation for the gold for last couple of months, it has been of a downward bearish momentum, and this time also we had these fresh lows. The lows were lower than the prior swing lows, and then now we also have the immediate top in place. This formation of top, I think, has been confirmed around US dollar 1880 per ounce, and now is the time to look for short selling opportunities where we can anticipate the gold to even cross closer to this immediate swing low, which is there about 1760 USD per ounce. So looking at that, I feel the immediate marker is going to be this central pivot point, which is there around US dollar 1835. And if we look at the price action for last couple of sessions, we have these convergence closer to these central pivot point, and if it doesn't really cross and hold above it, I think the momentum is now shifting to the bearish side, and it's the time to look for shorting opportunities. If we consider the regression curve after due consolidation, it is trying to rise again, but it's too early, and now we have the price action shifting into the low band of this regression curve, and that is going to put pressure, and we might see it flattening to some more extent in coming sessions. Coming to the hourly chart, we have this 50 SMA now crossing below the 200 SMA. So the death cross is also in place, and to utilize to profit from this, I think we will also have to use the help of this 100 SMA. And if we are looking for any bearishness in the gold, then in such circumstances, it will be of paramount importance for us to look for the safety also, to make sure that in case we go wrong, we shouldn't be losing too much money. So looking at this formation of the gold on the hourly chart, I feel we can utilize these 50 and 200 SMAs confluence zone, and try to keep the stop loss anywhere above this prior swing high and also the 100 SMA. And as a result of that, we will have this bearish tendency eventually pushing the gold further down the line, and I feel that gold is likely to cross below the US dollar 1,800 per ounce, and if that is going to be the case, we should be profit from this bearishness in the gold, and I feel we have this key SMA formation, and we can utilize this, and we can continue to look for any buying opportunity in the price band of US dollar 1,835 to US dollar 1,840 per ounce, while keeping the stop loss just little above this prior swing high, which is there around US dollar 1,850. So for a risk of around 15 points, we will be looking at the move on the lower side of more than 30 points to make sure that the risk reward ratio is in our favor. And if that does happen, we will be looking at a good amount of profit. Of course, that is going to be dependent on the risk you are taking, so the profit will always be proportional to the risk being taken. But from a technical perspective, this is a good trade, and we should be able to get out of the trade in a profitable manner. But it's never 100%, it's never like confirmed. So we always have to be mindful of the risk involved in the trading opportunities. So I would say that keep a watch on this SMA formation, and we can indeed look for fresh selling opportunity, and the stop loss, as I said, can be just kept little above the prior swing high. So unless and until there is substantial move, and we see the stop loss being broken, till then the possibility of profit is always going to be on our side. That's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Decoscopy webinar channel. Goodbye.